Everyone, me, Kevin here. Well. It's time to talk about the Great Reset, or the Great Flip-Flop, as we like to say. Well, then again, actually, I think I'm usually pretty remarkably consistent. I think title readers disagree, but I've been Nike swoosh all since November of 22 until about July of this year. Briefly in April, I wasn't super happy with where some of the AI valuations were going. And I mean, we saw what happened to Supermicro and Dell, so that happened. In the summer, we saw what happened to Celsius, and, we saw what happened after Robotaxi Day. But, the long term is still very bright for these companies. What we have to talk about now, though, is, what happens in the Meet Kevin reset, the Great Reset, where the world ends because of geopolitical issues or the presidential election, or straight up depression. What ends up happening? Well, there's also just the possibility about markets just potentially continuing to go straight up. And so we have to discuss and explore the potential of just straight up being wrong with a bearish narrative. So let's get a few things out of the way. First, I've got a really big reposition I'm working on, and I want you to hear about it. That is going to be probably a $3 to maybe $5 million position. Could be as much as 6, 7. I'll probably grow it over time, over the next 3 to 6 months or so. But first, before we talk about that, let's address this potential of just being wrong about being bearish. And I want to hand out credit here, first of all. Hello, there's a dog. Wow. I just want to hand out credit to all the people who do, frankly, fantastic research on geopolitics or the election. There's so much information out there that's to study and so much to read up on. And it's not the easiest to consolidate it all. I always try to do my best to bring you a consolidated version on the channel. So subscribe if you like that. But I actually do not believe that geopolitics, in opposite of Jamie Dimon, are going to lead to any kind of black swan or crisis. I know Iran can seem insane, but let's just be real. The clearest of day signals you need that they're not fully insane is that they communicated their coming strike to the United States and communicated with when it was over, and then actually stuck to what they said. Obviously, they could have lied, but, then they could have gotten nuked, too.
By the way, and maybe this is old news, but I don't think Russia is going to lead to any kind of crazy geopolitical black swan. I think we've all unfortunately gotten used to this over 2.5-year-long war now, and it's going to keep being a war of attrition. Yes, there are worries about China invading Taiwan, but not while they're trying to stimulate and get themselves out of depression. Yes, I know they're doing drills around Taiwan. They'll keep doing that. Of course, they have to. They have to put the face on, but it ain't geopolitics. And look, you know me. If you're part of the course member live streams, we study earnings calls on a daily basis. We know it's not going to be inflation. Mostly because companies are telling us there's no inflation, there's no pricing power left. And I'm talking about all walks of companies. It's very, very rare to see price increases still happening. So another reason why I'm, the opposite of Jamie Dimon approach on this. But then again, I suppose it's possible we're wrong. I mean, markets right now are positioned for no landing in the stock market, meaning no recession, and a resurgence of inflation, hence gold being so high. I actually still at this moment think both of those are wrong. I think that while I do have exposure to gold, which I'm happy about, I think it's nearly topped out. I don't think the inflation narrative will continue. I think we'll actually have more of a deflationary narrative. We just saw, oil prices plummet 4 or 5% in the last few hours here, but we'll talk about that in just a moment regarding Iran and Israel. And then frankly, I mean, unless all of a sudden companies start having some kind of pricing power again, there's no inflation right now. Of course, you'll always have a little volatility. But anyway, back to the video.
And so now, in response, Israel has suggested, okay, fine, we won't strike your nuclear enrichment facilities with, 30,000-pound bunker-busting bombs, Top Gun style, and we won't start World War III, as much as it feels like that's what's going on in the tinderbox of, frankly, the Middle East right now. I don't think geopolitics is going to be what takes this economy down. So that's off the list for me. I also really don't think election volatility is going to change much, mostly because it seems right now, per The Economist and other researchers as well, there's probably a 75% chance we're going to get a split House and Senate. And so I really don't see politics changing that much. Now, I know there are a lot of really hardcore Democrats or Republicans who really want Kamala Harris or Donald Trump, but I'm talking stock market wise. Usually post-election, we tend to see more certainty rather than less certainty. And so I'm actually a big fan of believing that you probably remove that as a catalyst. I don't see that as being the big catalyst that sort of takes this market down. Then, of course, we have to talk recession risk. Now, before I do, I want to say that what I'm going to do, and this is there are a few reasons for this, but I'm going to go through a little bit of a Meet Kevin reset, and then we're going to talk recession risk here. I'm going to go through a little bit of a Meet Kevin reset. What that means is I'm not going to be posting live streams, course member lives, or videos until at the earliest October 21st. On October 21st, I plan to reveal my big investment. So mark your calendar for that. It'll probably be in the morning of October 21st. So when you wake up, check for it. That said, mark your calendar for October 21st. But I want to take some time with my 7 kids, my 5 babies that are not coming on a vacation with me that I'm going on soon. I want to spend time with them before I leave. And then I want to spend time with my boys without constantly having to be attached to my phone to get updates and news like I usually do. It's kind of like exhausting, I think is the easiest way to put it. So a little bit of R&R time. And it's also going to be a time to celebrate 30 days of no alcohol. That is actually October 21st will mark the 30th day. So October 21st is going to be pretty special. It's also 5 days before Ella and Claire's 1-year birthday, which is incredible that they're already 1. It's crazy, but this is why I want to spend more time with them this week too before I go on a trip before their birthday. I'll be back for their birthday, of course. So that's the Meet Kevin reset. Okay, so I will be back sometime after the 21st. I will be posting a video with my portfolio investment update on the 21st. That is going to be this larger $3 to $5 million investment. We'll talk about that on the 21st and the details of that. And then I'll still be on my vacation, so it'll still be a few days before I come back to regular live streams. Stay tuned for when that will be. The return will be. Okay, so now let's talk about the recession thesis. Look, back in 2007, just like in the dot-com bubble, everybody always says this is just a normalization, this is a soft landing, the Federal Reserve has saved the day, they've already capitulated with a 50 BP cut, and frankly, there's nothing to worry about, things are just going to keep hitting all-time highs, all-time highs, all-time highs. And you know what? Maybe they will. I personally think it's highly unlikely because of where valuations sit. But what I'm going to do is over the next 2 weeks while I'm gone, I'm just going to also put my head into reading, not like headlines and news, but I'm just going to go deep into research. I'm going to watch some of these initial earnings that come out over the next week and a half to 2-ish here. And what we'll do, by the way, get yourself a Segway. These things are freaking awesome. Love these things. By the way, this is the playground where I made my first YouTube video on Meet Kevin that pushed me over 1,000 subscribers, which is kind of crazy. I actually think I went down that slide, which is also kind of cool. But anyway, let's see. Was that graffiti? Oh, that doesn't look appropriate. Might get demonetized with that. Anyway, so could we be wrong about recession? Of course. You know, if all of these company earnings here in Q3 are great and the higher end consumer and even the middle income consumer is still doing great and spending money, they're not losing their jobs, or if they're losing their jobs, they're getting a new job, we don't need to have a recession. You know, this could just be sort of this post-COVID double dip normalization, I suppose. It's a little weird. You know, you had construction job openings plummeting and then they revised it away. You had 2 quarters of negative GDP last year, in 2022, and then they changed the definition. You have really bad jobs data in July and August, and then they revise it better. So the data is really, really noisy. And the problem that I have is I feel like I've only been a bear for 2 months now or so. And I'm such a Train America person that I generally love just being invested in Train America. And this is why I'm really excited about my Monday update, where I can share with you a huge Train America update. Again, mark your calendar for October 21st. This is not like it's not like an expiring coupon code for the courses, okay? Like, you could use coupon code Art of War if you want. It's not an expiration on that either right now. Honestly, I want to be like super no pressure and just chillaxed here with y'all. But sure, look, the concern that I have is that layoffs will ultimately eat up the limited job openings that we have, and frankly, the velocity of people spending less, starting at the lower end consumer, will trickle up. You don't have to look far to see the lower end consumer struggling, and you're going to see more examples of that. We just had the rich banks, but I want you to see what happens with Citi, with Synchrony. I want you to see what ends up happening. I mean, you could look at AutoZone, you could look at restaurant performance. Like, all of these are really suffering because the low end consumer is just getting absolutely flogged. And so is that going to be enough? You know, when a lower end consumer spends, I don't know, $5,000 less per year, and then that translates into, velocity of money factor, $25,000 in the economy that's spent less, multiplied by however many lower end consumers, call it, I don't know, 70 million or whatever. Okay, what does that turn into?
That's 1.7 trillion, which would remove about 7% from GDP. In other words, you'd go negative in 2025.
But we're not seeing that right now with GDP estimates. Now, GDP estimates could be revised down, but we just won't know with a lot of this data until it actually happens. And that's why recessions are so weird, where it's sort of like, there's no recession, there's no recession, there's no recession, there's no recession. Oh my gosh, we're in a recession. That makes it challenging. And so, I'm not short stocks. I'm not short NASDAQ or Tesla or whatever. And I'm a big fan of people making money. Trust me, it's way easier to just be like all in, because if you're a bull and the market goes up, everybody loves you. If you're a bull and the market goes down, people still love you because you're telling everybody it's going to be okay. I just can't help myself. I feel like, not only with what we're seeing with the trajectory of layoffs, but the fact that we've just tightened the economy even more, and what's in the last labor report, which was all fugazi, along with manufacturing getting slaughtered, I can't help myself. I feel like a serious bear, and I just want to be honest with everybody. So I'm going to take the next, week and a half, and really analyze that for, the next video, the great flip-flop. I'm just kidding. You're going to see, on October 21st, a really big move that let's just say, I think, will be very, very powerful. And I'm very, very excited about it. But that's October 21st in the morning. That's Monday. But anyway, I don't know. Let me know in the comments. What do you think? Like, where's your head? What are you seeing out there? Because I do see a lot of comments from people that say, hey, at my job, we've never been this slow in 10 years and 15 years. I mean, people are basically comparing back to 2008 with how much things are starting to adjust and shift. And that is cause for concern, in fairness. So it's also possible that my bear thesis is just really early. I mean, if I'm a big business, I'm thinking to myself, well, I'm going to keep employees until December 31st to get through the holiday sales season, and then do layoffs in January and February. Yeah. I mean, I'm not planning any layoffs at my companies. I'm just saying, like, if I'm a really big company, maybe that's what people are thinking. I don't know. I suppose that's possible. So that, could then delay job numbers that are bad until February or March, when the reports come out. And then by the time you actually get a few consistently bad reports, maybe it's the summer of next year. I don't know. I gotta pay attention when I go down this thing. So who knows, I guess. But let me know what your comments are down below. I feel bad because I do like the routine, and I'm still going to wake up early, but I do like the routine of doing the Market Open Live. But I can't help myself but feel like I owe it to you to just really put in check all of my content and make sure that it's aligning with what the most truthful scenarios are out there. I mean, I think I'm truthful every single day, but I really want to triple down on the research. At the same time as take a break, catch up with the family, celebrate that 30 days. It's actually a big deal. Feel pretty good. Weight challenge is going good too. And then the workout challenge starts soon too, so that'll be cool. I'm doing this psychological thing where I have a challenge with someone else in the office. You got to lose as much weight as possible, right? Lose as much as you can, and then see how much you can grow after that, except you got to grow it back with muscle. So that'll be really cool. Yeah, I'll miss you. I don't really want to end the video because I just feel like we connect like on a daily basis. And even if you just inverse trade me or, you just listen to me for perspective, that's the whole point. I don't want to bring you crap that, everybody's saying the same crap all the time, because then what's the point? I'm not sharing any value. But I really want to triple down on making sure that I'm in the right headspace to get you that best value. And then I also have the best research to back it up, so we really know what we're getting into. So stay tuned, buckle up. Appreciate you being here. Use Art of War if you want to watch some more Meet Kevin and see all my sort of crazy ideas like chaos theory and investing, real estate investing, how to get wedge deals. I teach it all. Do-it-yourself property management, how to make YouTube videos, the 5-minute edit, the 0 to Millionaire real estate investing course with wedge deals. If I didn't already mention, do-it-yourself property management and rental renovations, that's a pretty big one. Stocks and psychology of money, the gold course on efficiency and productivity, that's a big one too. If you have questions, you can email us at staff@meetkevin.com. Another thing to know is we are kicking butt with our financial advisory clients. That's stockhack.com. I'll be in touch with my team through my radio. So even though I want to minimize my time on my phone, I'll still be reading and researching and in touch with the team through radio. So all of our advisory clients are still going to get fantastic help and consulting basically from me, right? That's the whole point of stockhack.com is you get consulting from Kevin through the guys. So, they communicate with you, evaluate your needs. I talk to them about it and we figure out next steps. That's a big thing. And so we're helping people with some of them with $1 million problems, some of them with hundreds of K problems, some of them with multi-million-dollar real estate problems, some of them with 100K real estate problems, some of them trying to get into their first house, some of them trying to get into their first rental. It's kind of interesting. So I'm excited for that. And I guess that's all I have. So until the Great Reset, I suppose, of October 21st, until then, appreciate y'all. In case you're looking for a spoiler, I don't have one for you, but I do appreciate you. See y'all soon. Goodbye. Good luck. And yeah, I'm going on vacation, so not financial advice, but some people might know what that might mean if history has any guide. All right, folks, we'll see you in the next one. Goodbye. Good luck. Love y'all.
Not advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.